Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, in this falling market, we are going to track what are DIIs buying. And are they buying large caps, mid caps, small caps? So today what we're going to do is we're going to look at a range of large, mid and small. We're going to understand these companies a little bit, not too much in detail, just to try to understand what are these DIIs buying. Now, domestic institutions have been buying the dip because FIIs, as you know, have been selling from God knows how many months. But from the last 3 years, FIIs have been selling and DIIs have come to the rescue and they are buying. Now, a lot of people have this debate that, FIIs are leaving, it's a bad thing, DIIs are investing, it's a bad thing. Well, it is all a part of the market. It is the cycle of the market. But DII stepping in at this point also shows that we are somehow building a good foundation layer for the Nifty, right? Obviously, 10 years down the line, I would love for DIIs to have always more stake than FIIs because this FIIs coming in and going really affects our economy and it creates a lot of volatility. So right now, DII is taking a lot of stake. As of today, DIIs have more percentage in the market than FIIs. Now, obviously, FIIs have gone out today. They will come back again because वो किसी के सगे नहीं है, right? They're only looking for returns. आज returns है, they're in one country. Tomorrow returns in another country. Again, India is attractive. They will come back. But DIIs, sadly, they can't go anywhere. They are stuck here. So that is why we want DII ownership to go up in India so that this volatility of exit and entry will not create a problem. This dollar conversion problem will also not happen, right? But it's a long-term game, not a short-term game. But let's quickly look at what is going on with the market and let's understand some companies that are large cap, mid cap and small cap. Also guys, a few months ago, as you know, we had launched our small cases. We have two small cases. One is Fluid C, which is compounders basket, and one is Fluid Q, which is a quant and momentum basket. Right now, both are very interesting baskets with different risk profiles. So if you want to look at this in this market dip, you can definitely check it out. Fluid C is basically a basket that works mainly with a compounding angle, right? This is for a long term thing. It is high risk, but it is a long term basket that works out. And then we have Fluid Q, which is a momentum basket. Now this is again every month we rebalance this. It's a short term quant based basket, and here we had taken a very good cash call, as you can see. So we did not take this fall at all. We have taken a cash call, but if you want to look at it, you can use the code YTAPR, which is YT April. Okay, chalo, let's get back to the video. Now, the first company I want to look at is ICICI Bank. Now, please understand, guys, all the companies that I'm showing you right now is not a buy or sell recommendation. I'm just showing you what are DIIs buying in this dip. Now, ICICI Bank, basically private banks have not been in the flavor in this market, mainly because PSU banks had their balance sheet cleaned up. They were all sitting at less than 1 time price to book, and that is why PSU banks started rallying a lot. But the private banks that were rallying a lot in the last leg, which is your ICICI, HDFC, Axis, all of them have taken a massive beating, but that's an opportunity, right? Because today you should look at what is contra. If you go and invest at the top, you will always lose money, right? So PSU banks, yes, they have rallied. So now start looking at the guys who are forgotten, the fallen heroes, right? So ICICI Bank comes here. It is currently sitting at 2.5 times price to book. If we look at the historical price to book of this, it is currently at a very, not very low range, but it is currently at a okayish range, right? Whereas HDFC Bank, I would say, is at the lowest point right now, COVID levels, 2008 crash levels. HDFC Bank is somewhere here, right? But I don't expect ICICI to be at 0.7. So even 2.6 is not a bad price to book from a valuation standpoint. And if I go down to investors, you will see that the DIIs have been adding this right now. If I do yearly, you will see it more beneficial: 41, 44, 45, 44, 46. So now the public shareholding has gone from the last 5 years has gone from 10 to 9, and the private DIIs have started taking a good amount of stake in this, and they have increased their stake as well. Right? We've seen FIIs reducing, but DIIs have come and picked up. So ICICI Bank is looking very interesting from that point of view. Another company that is again looking back into DII's radar is Adani Green. Now, if you look at Adani Green, with all these problems going on in the entire market, Adani Green has a good jump in the DII holdings. As you can see, they were at 1%, then they became 2%, and now they become 4.3% has just become DIIs. And that has come at the cost of public shareholding. So it's a very good sign that whenever public shareholding goes down and DIIs step in, that is a good sign, right? Now we can see here, who are the DIIs that I have bought? Basically, LIC has been buying. LIC has 1.3%, and recently in this quarter, last quarter, Quant Mutual Fund, Quant Small Cap Fund basically picked up a good amount of stake in Adani Green because of all the new Khavda plant that is coming, the solar plants that are coming in. All of these is coming into the picture. Best projects, as you can see, they've recently started adding a lot of best projects, in fact. And Khavda has been their main region. Now, what Adani does, please understand, is that they get these projects, but they never implement these projects. They implement it via other companies in the market. So it's very funny because this same project goes to like 5 different people, because I know some of the companies I also hold where they all get Adani's contracts. So Adani buys the contract at 100 rupees. They will give it to someone at 80 rupees and say, "Aap service karo." That guy will give it to someone else at 70 rupees and say, "Tum service karo." And all the share prices go up, but it's actually only one order. But that is what has been happening with Adani Green. Very interesting for all of you guys to look at. Another company that is in the small cap, mid cap territory is Belrise. Okay. Now this is the auto ancillary theme. Now you know that auto was doing really well, mainly driven by minus GST rate cuts. Auto companies did well, so obviously auto ancillary companies will also do well. But if you look at Belrise, look at something very interesting. They're sitting at a 35p. Again, I would not give very high PE numbers to any auto manufacturing company, because at the end of the day, they are commodity plays, right? Unless they are a precision company, make something very unique that is not a commodity, I would not give 35, 45, 55 PE in this market at least. So I would say safely that this is not a very low value company. It is priced very well. But if you look at the chart, even in this bad market, they have been going up. They've gone up from 100 in the start of the year, I mean last year, to almost 200 in the last 1 year in this pathetic market. Now, if you look at Belrise, obviously, if you look at their profit and loss statement, they have been doing well and they have been growing. They're operating at 12% margins, which shows that they're commoditized in nature, right? So they're playing in bulk volumes. The PAT is okay. I mean, the PAT is not rising as much as it should. They have a heavy amount of depreciation, but also their interest cost is going up a lot. From 216, it's gone up to 307. And that you can see here that their interest cost was very high in 2025. But this year, they have reduced the interest cost by increasing their equity. And I'm assuming that because the equity capital has also gone up, they might have done like a rights issue, or they might have even done a QIP. So if you actually go check, they might have recently done a QIP, or they might have raised money somewhere, or sold something, or acquired something. That's the only reason why, yeah. So they have amalgamated PABP. So their things have changed in that perspective. Not bad. I mean, it's okay. It's fine. Right. Coming to the DII ownership, as you can see, the DII ownership, which was 4%, has now gone up to 9.25%. Let's see who the DIIs are. So SBI Small Cap Fund has come in and taken 5.76%. That's a lot of stake. Usually mutual funds, what they do is they buy 1% and then they slowly ramp up over time, right? They buy 1%, then they buy 1.5%, they go to 2, 2.5%, 3. But SBI has come in and directly taken 5%, which is very shocking. Nippon India Small Cap has 1.21 and they're holding it for a long time. But very shocking. Even FIIs have actually gone up. FIIs, you can see that Small Cap World Fund has come in, but SBI Small Cap taking 5% is very, very, very interesting. Right, very interesting. That means some very interesting plays happening in this company. Debt reduction has happened, capital appreciation has happened. If I go to balance sheet and check, yeah, okay, this was the increase was because of IPO. Okay, got it. The increase in equity capital was because of IPO. The increase in what do you call that? The increase was also because of the IPO with respect to their reserves going up. So that makes sense. And that is why their debt has reduced a lot. That means your interest cost will start going up. The fixed cost has actually gone up quite a bit. So they are investing heavy into fixed assets as well. So this is something very interesting to look at. Okay, coming to the next company. Again, Varun Beverages, a crowd favorite, was my favorite, is still my favorite for long term. It didn't do well for some time. It actually fell down a lot, but can't complain because it also went up from COVID levels from 59 to 600. So it gave 10x, went down maybe 20%, and it's getting ready for the next rally, but it will take some time. From a sales perspective, the sales has grown less this year, 8% only, but they have been growing very well over a long period of time. They're also doing very aggressive acquisitions in this market. Their balance sheet is very clean. They have very good reserves, very less borrowings. If you look at dividends, this is something I like to see. The dividends are consistent, right? They've recently done a QIP as well. So they've raised a lot of money for more acquisitions. And if you look at their DII public holding, look at this change. This is what I mean. The DII, if I do yearly, you will see it better. It's gone up to 13% and public equity has gone down to 6%. FI has gone from 25 to let's say 20, but DIIs have taken from 4 to 13. Now, who are the DIIs that are buying? We see that LIC Index plus Flexi Growth Cap has come in, Nippon India has come in, Arbitrage Opportunities Fund, Pension Fund. So, a lot of guys have started coming into the picture. which is again very nice. And Government Pension Fund Global is selling a lot of stake in this. Government of Singapore is actually adding. Government of Singapore is a very interesting case study. If you guys should definitely try reading about Government of Singapore, because the companies they buy, usually they buy for a very long period of time. Again, it's not a buy or sell recommendation, but it's very interesting to look at what they're adding. I like looking at what they're adding because they usually buy these market leaders and they stay invested for a longer period of time. So Apollo Hospitals, they have 2.34. Apollo Tires they have. So they're increasing a little bit in Ashok Leyland. They recently bought Bharat Electronics. They bought Aditya Infotech, which is CP+. So again, you should definitely keep tracking. See this? They're constantly increasing stake in Divis Labs. In fact, Divis Labs has fallen so much, they've been buying more and more and more of Divis Labs. So this is something you should definitely check out if you have the time as to what is Government of Singapore actually doing constantly, right? So this is something we definitely need to start learning more and more. Now coming to another company, we'll do two more companies. One is TechM. See, I'm trying to show you mostly large cap companies, not small cap, because I don't want the risk to go up. And I believe that in this next rally that market goes up, large caps will go up first. This is sitting at 29p, well below the industry average. It's fallen down. As you know, all IT companies have fallen down. So this has also fallen down. And if you look at the profit and loss statement, let's see if they're growing. Barely any growth, like all the IT companies, no growth at all. But if you go down and check the DII holding, they have actually kept constantly going up. Actually, from 2 years, it has gone from 25 to 37. Right? I think this is a better picture. The DII holding has gone up quite aggressively, and at the same time, FII holding has gone. So basically, the FIIs have sold to DIIs. So DIIs have taken massive amount of stake here, and obviously, public shareholding has also gone down in the same process. Who is buying? LIC is buying. Left, right, center, LIC is buying this company. Again and again, LIC is buying. SBI Nifty 50, because this is the index fund, so they're also buying a lot. So they keep a nice cushion to it. Kotak Flexi Cap has also taken a good position in this, right? So very interesting. Even though it is beaten down, not doing well, and there are better companies at better valuations, this company is still doing much better. Coming to another very big company, market share high is Indigo. Again, fallen from the peak, very good fall from 5,800 to 4,100, again because of rising aviation fuel charges and all of that. Indigo has been a grower, has been growing, very good market share. Air India is giving some competition. Again, they're now building their reserves up. They never had reserves, but they are building their reserves up. This recent CEO went away, new CEOs coming, new flights are coming. All of this is coming. So growth-wise, Indigo has a lot to play for. Coming to DIIs, look at the DII holding now. So FIIs have not, in fact, reduced. In fact, FIIs have kept. Right, FIIs have not reduced a lot. As you can see, FIIs still have a good amount of holding here, but DIIs have gone from 13% to 28%. Basically, the promoter has gone from 75% to 41%, and the DIIs and FIIs have taken the entire promoter share. Public shareholding is pretty much the same at 5%. And this is so funny because when that whole incident of Indigo happened, the shareholders were crying so much, but there's only 5% of the shareholding is with public, 95% is with the promoter and the other people. So they have to worry, not you. But most of the worrying comes from retail public, right? So DIIs have actually gone up 28%. Who are the DIIs buying this? So ICICI Prudential large mid cap fund has taken very good position. Equity hybrid fund of SBI has taken a good position. NPS Trust has taken a good position. Index funds will obviously be there. Again, Investco India Savings Fund, Equity Savings Fund has also taken good position in this. Now, again, if you look at Indigo, they are a low-cost provider. They are the guys who keep going up over a long period of time. If I look at it from a 5-year to 10-year perspective, there's nothing wrong with Indigo as of now, right? Fundamentally, everything is fine, everything is good. So it should do well over a long period of time. Again, I'm trying to find out very obsessively what are DIIs buying in this market, what are superstar investors buying in this market. Again, I am also buying some shares in this market because it's so beautiful at such beautiful levels. Yes, would it be nice if it goes up? I mean, 2 years हो गया, अभी थोड़ा पैसा कमाने का time है. Yes. But ठीक है, I think there are different plans for the market. Eventually, it'll go up. But this is every time I get salary, I would like to put it back into the market as much as I can. Whether it's individual stocks, whether it's your mutual fund, small cases, does not matter. Just keep investing in this market because you will not get these levels in the future. Awesome. Chalo guys, take care. Any doubts, any questions, you can let me know in the comment section below and I will see you guys soon. Take care. Bye-bye.